We are very happy to celebrate that when things, and we hit our target and we got short up there again, and this will be highlighted everywhere. And now it's down $20. You do the math, the range is $30. When you get so overbought and you know where that price level will be, you shall get that reversal within bear and bull trends. And the thing about it is, we have a series of it. We put it out this morning in pre-market, and you can see the reversal in play right now. 774 up there. That 775 is my target. It made a liar out of me by 4 pennies. It was time to short it. Of course, everything else followed it. This overbought stock, Apple, once again, we're in the last hour. We have Mr. Obama on television. And the VIX, the fear indicator, finally got back up above 20. All right. Copper futures extend weakness on record trading volume today. That means that there's a contraction in growth. And the market sell-off continues because the bull was too overbought. And now you have to cherry pick the leading companies that will do and serve you best outside of making a market. You want to take advantage of the weaknesses. So you made, look at this Apple, 644. That's an $18 reversal range. Every time it makes a high, yes, brand new highs, but look at the great reversal trades. And then buying off the bottom and then just keep selling back into the public. And how do we do it? Well, it's been a great day. And so here's an Apple, and this is what I'm talking about. That's that reversal right here. And here's where we called the reversal, and here's a highlight of that short top. And we were right up here at that short top. It came down this morning. Here, let's get this right in here. This was the opening gap up to that 52-week high. And once it got right here, this was that gap. And we got up there. We came up. We hit it. We couldn't get above the teeny. We got that short. There's your volatility bounce. 1 teeny, 2 teeny, 3 teeny, roll over. Then it got even worse for them because the shorts started working good right at that break line right here. Let me show you. Right here, MMT. Hopefully it was all right here where we went to that. This is not the right side. This is that left side. The right side is right here. It's making a great bounce off the bottoms right now, right back up in here live. But we're talking about earlier in the day where that thing dropped and made that bottom. That was that $10 reversal that I told everyone to watch for in pre-market analysis this morning and during the trading day. And MMTs, you were there, and you know that's what I said. And that's only because you get so overbought. You get so overbought that you have to pull back. And another thing I'll feature on the chart right here is where the cliff dive took place. Right here, the short side, the overbought side. It was time to unload it. And once it started to roll off to that left-hand side, those diamonds getting weaker. And every pop, you finally made lows that were tradable, but you finally made it right over here. And we're in the last hour of the day. That's Apple Computer. That's the script. 1, 2, 3, 4, 5 teenies. I got above it, but what happened is right above the price level, though, you look at that top. Here's that, whoa, diamond. Oh, my goodness. What a diamond alert. And that means that you were closing negative and it was time. And then look at the script. 1, 2, 3. So basically, this is how it's been going all day within the price structure on Apple Computer. The rest of the market, it's flat, MMT. The short on the price line, oh, look at that. Hey, did you get hit? 740.91. I had orders down there, and I know I did. And it bounced $3 right here on the price line, live. Here it is right now. We're in the last 28 minutes, and we got that nice bottom entry down there. That was that $10 short that I said. But here's the thing. I said it was going to come down and break that 636 by $10, and kabingo, it did. Now, look at that move off the bottom and why you would be selling in here. So the thing about it is those bottom up trades off of that bottom was great. The short side coming down, breaking the previous day's close at 623 by $10. That's where we found the market. Remember, everybody, that every bull has a shakeout. And we have told people for the last 2 to 4 weeks on stockmarketfunding.com that you would experience a bull shakeout, and that what happened is the prices would get so exhausted that you would see an increase in price volatility for the next 90 days, starting the first day of April. Oh, yes, you would. And you are seeing it right now. And this is exactly what we said. We said it that way so that we would be helping you, so that you would adjust to the market when you see these kind of movements. Therefore, we felt that we would help you by letting you know the first day of April for the following 90-day period that price volatility was going to come back into this market. And that meant that the bull run had to have the other reversal debit. That's the reversal highs that come down in prices, and you make money on them like now. And that when they're overbought, they're not going to stay up there, and there's a 2 to 4 week process, and there is, because there are different levels. And nonetheless, you can see how wonderful the tape has been to the short side. It's been good to the long side. Look at Priceline, 774.96, 73.9.06. Hey, $35.90 short. I had that short pegged in the morning. This is what bull rallies do. And price volatility, like I said to everyone before the fact, and let's just call the truth, is that if you go back just last week and the week before, is that where April would have a much higher degree of price volatility. And what does that mean? The range on Apple, $18, range, $35.90 on that one, range, $9.95 on Google. There's lots of other ones. We had the put options. They're all paying everything right here. The call, we're going to look at how this 625 on call on Apple here that hit 9.25 with bids at 9.50. That was a markdown, and right now they're almost $2 off the bottom on the 625 Apple call as we're in the last 25 minutes. So I just wanted to kind of walk around and let people know what kind of moves we've been doing all day live. And the ISRG, we talked about the short, because we did, and that high was 538. The range, $10 reversal, and then coming off the bottom to 534. That's a $6 move. Nice move. CMG, another one of our culprits on our hit list, and we've been doing them. And when this one got way up to the highs, that's got a $9 reversal. Yes, it does. And that's another one of our shorts, okay, with the $14.36 range. This is what bull rallies do. Bull rallies need to pull back and shake out the buyer. We're getting paid on that side of the market. Then we'll get ready and get the long side off of the bottom. And that's the CMG trade. Here's another one, CRM, that was getting walked up yesterday. Look at that, 154. It's in a reversal. Was up there at 159, but it doesn't matter. Every bull exhaustion price area has to have a reversal. And that's what we're talking about, price volatility increasing. Let's take a look at AutoZone right here, 635 down, 375, 383. How nice. Look at that. $2 off the bottom almost. But these names have to come down. This one still has to come down a lot more. But nonetheless, pullbacks have to happen so that the bull that's on the sideline can get back into the market. Let's take a look at IBM. Down $2. We said right up there around that 210 area that you'd have to pull back. And hey, it's been a great performer. They're just overbought. They have to pull back to meet their earnings cycle. Alcoa starts today. MMT, and we're within minutes of it. And I will just tell everyone, just like I said, there would be price volatility increase. You are going to have a high degree of volatility in the headline number in the after hours. Um, a lot of stocks will gap and then sell off, or how about buy the rumor, sell the news? Remember, bull rallies have to work their overbought levels off. The capacity has to get worked off, those levels. So as everything is going in that direction and doing what they should do, you're going to look for the best of the breed to buy those dips. So IBM, once again, you can see where the big one is, where it's at. That's a big mover there, okay? And you're bouncing off the bottoms. So the thing about it is FFIB. We featured that one, that it had to come down. And look, it's 134.67 had been topping out up there. And let me tell you, past performances with this stock right here is that it's coming down. It ran up to great highs and was a great bull performer, but the bull had to come down in price, and I have to make money on it. As look at that low. He's got a nice bounce off that low. So when you sell short here and it goes down, you make money. Anyways, let's go to another one that we could look at. How about the one that reports earnings, Alcoa? Doesn't trade much, down 23 cents, but this is the one starting the earnings season off. Nasdaq 2700 call. It was $63. The lows down here at $28, bouncing 34.60 by 35.30. That call side of the market got marked down on the Nasdaq index, $2,700 call. Buying down there on the bottom. Let's go back to the Apple trade. Oops. Here we go. There's that reversal. So it's been a good day. And you can see where these rallies, you can see the reversal to the support levels here on Apple, and then you can see 1, 2, 3, 4, 5 teeny breakout. And what is a teeny today? 91 cents. So go 5 times 91 cents, and that was your entry, and that's your exit right up in here. And that's exactly how accurate this is. And that's exactly how accurate the pricing scripts that we have. Started right here. Came down, same distance, came right back up, and it's right there between the bid and the ask at that resistance level. And that's the pricing script. And those are the ranges that are happening right now, 20 minutes into the closing bell. There are other great ones. We'll cover them later, though. Panera Bread was another one. ISRG was another one that we already showed. The Amazon reversal, MasterCard reversal, all of the high betas that were overbought had to come down, and that was where the least amount of risk was for the higher degree of prosperity.